What is going on, everybody? This video is going to be a trade recap and breakdown from Monday the 19th of September for the S&P 500. I'm pretty much going to be breaking down step by step as to what I see in price and how I react to what the market presents to me. So this is pretty simple. I have some annotations marked off for the S&P. As you can see, we are currently having bearish order flow after running these relative equal highs. On top of that, this is also a weekly fair value gap. Friday's daily candle close closed in a hammer, as well as leaving this volume imbalance that we have and are going to use, that I use personally for reference as a draw on liquidity for Monday's price action. Because once price took out its previous weekly low, I'm obviously going to be looking for a retracement after sell side is taken to take out either internal buy side liquidity, or I'm going to be looking for a retracement to a volume imbalance, which was my draw on liquidity, but I'm going to show you that in a minute. As you can see, this here, everything to the left is Friday's price action. What do we have here? We have relative equal lows that were actually taken out here during London, right before London closed at 5:15 in the morning, or right after London closed, my apologies. So this previous weekly low was taken. So previous price on Friday took its previous weekly low, and then Monday's price in London took out Friday's low. So we already took out Friday's low that took out that sell side. There's a daily volume imbalance that needs to get rebalanced and filled, which was, and like I showed you, the draw on liquidity for me and had my attention. We're below midnight opening price, and on top of that, let's go right to 8:30 open. Let's mark off 8:30 open here. Okay. Mark that off. Mark here. And also keep in mind, anything that is below midnight opening price and 8:30 opening price is considered to be trading in a deep discount. I would not be looking to sell or take shorts when price is trading below 8:30 opening price and midnight opening price. You don't want to sell in a discount, you want to buy in a discount. That's like saying you're taking buys when price is trading above 8:30 open and midnight opening price. You're buying in a premium. You want to be selling in a premium, not buying. Okay, so I see that we already prior to 8:30 open, we have a bullish shift in market structure on the 5-minute. So here's our bullish shift in market structure. And what did price do after it broke? We are going to draw our premium and discount right here. So this swing, this energetic swing, is what broke market structure, giving us our shift. And now after a shift, what do we look for? We looked for a retracement into a discount. And what do we have here? We have a 5-minute fair value gap that is inside of the discount of the price swing. So here is our bullish fair value gap. Put that in the top right. Okay. All right, and now I'm not entering, just keep in mind, I'm not entering on this gap. Why am I not entering on this gap? I'm not entering because it is before the New York Open kill zone for indices. Time is super important and very crucial when it comes to entries, and you generally never want to enter outside of ICT's kill zones. Okay, so we have price retracing into a discount of this swing after our tag of this 5-minute fair value gap prior to 8:30 opening price. I am now looking for a break of structure. So we had our market structure shift. Now I would like this high here to be broken. So I'm anticipating this to be a BOS. So I'm going to mark this off as anticipated BOS. And after price breaks this high, then I will know for sure that we are in a confirmed trend change. So I'm going to play price out a little bit more. And as you can see, just that wick is our confirmation that we are now in a move to the upside. Okay. As you can see, we are inside of the kill zone. So after we have our break of structure, what do I do? Okay, so now after price broke this high, we had our break of structure. So we can take this away. So we have our shift, our break of structure. Actually, here I'll mark it off just so that it's good for reference. No, top, shift, BOS. Okay. What did we do here after price made its shift? We marked off premium and discount from this price swing that created the shift. So from this low to this high, this was what we were looking for price to retrace into a discount. So now what am I going to do? I'm going to look for a premium and discount of this range from this low to this high. Why this low and this high and not this low and this high? Because this is the swing low and this is the anticipated swing high with a higher candle to the left and a higher candle to the right. This is the low. Here's the swing high with a lower candle to the left, a lower candle to the right. I am using that price swing to identify my discount of where I'm going to be entering. So what am I going to be doing? I'm going to be looking for a fair value gap. I'm going to be looking for an order block, anything inside of this swing for an entry. And what I'm going to do here, I'm going to mark off this fair value gap here on the 5-minute. This is my fair value gap that has my attention. But there also is an order block here, a 5-minute order block here. And on top, it's good to pay attention to this because this order block here is below 8:30 opening price. So ideally, this would be the ideal entry here. So I'm going to mark that off too. But I personally am trying to be safe just in case price runs without me. I still feel comfortable entering here with a stop loss below the swing low. What are we going to do after this? We are going to mark off potential targets as to where you can take profit. And what do? I just mark off highs past my entry. So I look to my left. I see here relative equal highs. But another thing to keep in mind, what I have been doing lately is I've been taking off 80% of my position at a 2-to-1 and then letting the rest of my position, 20%, ride free after I take off the biggest chunk at a 2-to-1 R. So I'll show you as we move on from here. But here's another high here, and then here's another one here. And then on top of that, obviously, if you did want to leave leave that small portion, this was my draw on liquidity, the daily volume imbalance. So what am I going to do? I am going to play price and see what happens right here. So here I had a limit order that was triggered right at this tap. Right at this tap, my limit got triggered. And what do? I have my levels taken and set. This is my biggest chunk off. And this was my final TP. Actually, I believe that I put this was probably BE. This is break even, partial, final TP. And as I fast forward price here, what does price do? We go through the bullish fair value gap and discount, and we tap the bullish order block and continue. Keep in mind that this is at 9:25 and we have 5 more minutes until New York Open at 9:30. So let's go to there, and boom, what happens? Price retracing into a deep discount below 8:30 opening price and below midnight opening price, as well as respecting the bullish order block. And just watch how price plays out, and boom. We literally smoked, went break even, took a partial, final TP here. And this was the trade. And now I'm going to be showing the live recording of the trade happening at the end of this video.